This episode was sponsored by Property, the leading real estate agent for all real estate transactions with a comprehensive ecosystem. They combine highly trained experts with the latest technologies on an intelligent platform to provide clients, brokers, and service partners with risk-free, flexible, and simplified services. Learn more at property.com. That's property with an I.com.
We have proven over 6 and 7 years now, actually, that we are able to identify those companies that are able to make better earnings day after day. And we will exit companies that don't manage to do that anymore. So I'm not saying that today we say in 10 years this will be the best company. We reconsider our decisions regularly, every half year, actually. I think as long as interest rates exist, inflation is a little bit around, more and more the earnings of the companies will matter. Their profitability will matter, and we're really good at that.
Welcome to the Swisspreneur Show, a podcast about startup stories and learnings from experienced entrepreneurs. If you enjoy listening to our show, make sure to follow the podcast and leave a rating. And now, here's your host, Sylvan.
Evelyne, very well welcome to the Swisspreneur Show. It's a pleasure to have you as a guest today.
Thank you, Sylvan. I'm very delighted to be here. Thanks for inviting me.
You're the co-founder CEO of the Singularity Group, a company quantifying applied innovation in listed equities. I'm really curious to have a great conversation about that topic. But before we dive into this, you actually studied food science, which one would not naturally expect to then leading you to the finance world. So why that change from food science to the financial world?
I don't have a very sexy story. I actually was at the Polymesse at ETH, where you can sign up and put in your exam results, etc. And I was contacted by a few companies. And one of them was the Capital Group in Los Angeles. And my decision was, at the time, I think predominantly based on wanting to go to America. So I thought I'd give finance a chance to have the opportunity to live in the US for a while.
Why was the US so appealing to you back then?
Back then I was, I think, introverted scientist that very much believed in science, but also believed that Switzerland and Europe was not that great and that America was the greater place on earth because I followed a lot of media. I learned the other way. But back then that was, I think, the notion I believed. And I wanted to check it out. Yeah.
And what was it like back then? Did it live up to the expectation or not that much?
In some ways, I actually wanted to stay in Los Angeles after 2 years of living there. In the beginning, I hated it, I have to say. But LA, and I think the whole of America is a nicer place to live if you have a lot of money, was my conclusion. Yeah. Back then, that wasn't the case for me. And I think a lot of things weren't the way I expected them to be and not that great. So I'm actually, having done a little bit of a tour of the world, including America, I'm very happy to be back in Switzerland.
That's the right place for you these days.
Yes.
And before you started the Singularity Group, you actually worked for other people for about 10 years. And I just wonder, was that then sort of you were fed up of working for someone else that you wanted to start your own thing, or what motivated you to do so?
No, not working for somebody else. I think that didn't really bother me. Although, I mean, I think in finance, if you're a portfolio manager and investor, you also work for yourself because you're measured on your performance. At least at Capital Group, that was very much the case. I was more upset maybe with the way things were done by the industry, not necessarily the company I worked at or the people I worked for, but just by the rules by which you had to play if you were in that kind of bigger world already, and wanted to change a few things for the better in terms of how I felt portfolios should be constructed, how I felt funds should be set up, and what they should be focusing on.
And that was then probably a bit easier running your own firm, so you had the freedom of making that decision.
Yes, the decision and doing it was easy, but selling it in the beginning, not so much. So
I see.
Yes.
Let's go back to these early days. In 2017, you actually founded the Singularity Groups. And I just wonder, the concept of quantifying innovation for investment purposes, that was a bit of a new thing that you did back then. So what was so special about that?
What was special about it was, the thought process. I think that investing in innovation had to be something that spat out a portfolio that made money rather than spent money. And that's why we wanted to quantify, the level of innovation that a company has by the amount of revenues that they make that we deem innovative. So there's a lot of decisions to be made, like what is innovative, what is not. But that was the main crux to it. I think the background of that comes from being a investor and analyst in energy and resources. And in that space, you're very much a cash flow investor. You understand cash flows, you analyze cash flows, you try to invest in the companies that within that phase of the cycle make cash flows, make revenues and cash. And it's interesting that for a lot of thematic funds and strategies and tech funds and strategies that my co-founder at the time found very interesting, that kind of cash inflow approach wasn't there at all. And so we kind of thought that we might be onto something that a lot of other funds were not focusing on.
Amazing. And to better understand that, you also very much differentiate between innovation and applied innovation. Why is that an important differentiation to make?
We coined the term applied innovation to differentiate exactly from what I'm glad you're asking the question, actually, because lots of people put it in the same bucket. Innovation can mean many things. And if you look at the most used innovation factors by funds or even surveys, even non-financial surveys, it's R&D expenses, it's patents, it's marketing, it's capex in tech, it's M&A in tech. So it's very focused on tech, first of all, and not in other areas of innovation. And it's also R&D, patents, marketing, capex, M&A. Those are all expenses again. Those are all cash outflows. Yeah. So for us, applied innovation was used, or is a term we still use, to identify or differentiate that it is something that actually makes money, that is doable. First of all, to make money, it has to be doable, right? So it's applied. Yeah. There's a value chain to it. And yeah, that's again something that lots of innovation and tech strategies don't really focus on.
Yeah, and also the capex that you mentioned, that often also has tax implications, right? They want to have these spendings to also reduce their tax burden to a certain degree.
Yeah, there's a lot that you can manipulate, of course. That's why, the most successful investors that I came across that were regularly successful actually had this very tight cash flow balance sheet and also revenue focus in their kind of mindset. And we just wanted to build a company and a system around it. Yeah. So we're not so dependent on people anymore.
And there, of course, the big question comes up, how do you actually measure that? Because that's ultimately the key part to then execute your strategy.
Yes. So I wouldn't say we have, all we could do is find the best approximation. So we definitely didn't, we haven't found the holy grail of how to measure exactly the innovation score of every company or the cash flows they make, because cash flows are also difficult to understand. And in the cash flow statements, things are also tumbled together. But our best bet is actually to go by company segment reporting lines. And those give you a little bit of a gist of what the company is throwing in there, what the products or services are in there. And we then identify, come by if you want to learn more, but we identify or figure out and try to understand and analyze if those products and services belong to an innovation value chain or not. And so our approximation is to use revenues.
Got it. And that's probably also the closest you can get to really measure that
Yes,
part.
It's already difficult enough, actually.
Yeah.
So that's as close as we get. But we creep. Just today I spoke again with our CIO, our head of research as well. We're constantly trying to see how we can improve that and make it more granular and more precise.
Absolutely. And I wonder, where does the name, the Singularity Group, come from? What inspired that name?
A few things. So a lot of people associate us with Singularity University, who we're very friendly with and share a common drive with. Currently, definitely. It's actually, a term that is often associated with the developments in artificial intelligence, the increased compute power and how fast it keeps increasing. And it's kind of this moment where artificial intelligence outpaces human intelligence. So the tech kind of geeks have coined that term as that moment in time. In maths and physics, it's also the moment in time or the space in time or anything that is where everything is and nothing is. We latch on to the developments in compute power and apply those developments to multiple technologies or multiple areas of technological development that expand beyond the semiconductor space. Because we actually not only believe, we used to say we believe, but we know now that the only way these things are doable, applicable, and can be applied again and measured is if those things come together, right? And one of the best examples there is that the newest AI chips, and don't need to name companies now, but the companies that made them wouldn't be making so much money with those chips if they didn't have the place to apply them, right? So you need other things to happen. You need the digitized world to be out there. You need an end consumer that might be an industrial company or a chemical company or a drug development company. You need all those things to come together. So you can't just have this compute power being all powerful all by itself.
There needs to be an actual use for it.
Yes, exactly.
Got it. And you co-founded the Singularity Group with Tobias Reichmuth. He has also been on the podcast multiple times already. How did the two of you meet?
Multiple ways, actually. So I met him regularly. I used to go as an energy analyst and PM to the SUSI Partners events. So SUSI Partners was the company he founded first, renewable energy infrastructure, energy storage. So I used to go to those events because they were very informative. They had a great network there as well. So I met him there, but also socially, kind of we overlapped sometimes in circles or events we went to. And then I think a few times just kept talking to each other about investing, about how to invest in new technologies. He was very convinced that new technologies were the solution to every problem, not just the energy problem that he was solving with SUSI, and wanted to invest. And I think he eventually approached me and said, hey, Evelyne, you're a PM. I invest in funds, the moment I have some money now. And I believe in technology, but always, every time I invest in a tech fund or a new theme fund, no matter who the provider is, it goes up once and then back down. What am I doing wrong? What's going on? Why do these funds always vanish once I've started to believe in them? And I told him, my initial thought was, as an energy and resource investor, well, because they invest in cash outflows and not inflows. And I think he thought about it afterwards and came back to me again and said, hey, you told me something, can we do something about this? Can we change it? Can we create a fund that actually doesn't collapse? And that's how we got started. I
love that. So the start was basically an intellectual discussion about investment strategies.
Yes, and I think a need on his end or frustration. I mean, it overlapped with a frustration on my end of, how things were done and by which rules you had to play by. Yeah. And so at one point, I think he said, hey, Evelyne, you have so many good ideas and you know everything so much better. Why don't you do it yourself?
Exactly, yeah.
And my answer, I remember, was, well, I don't have the network to build this up. I don't have, a plan or money to do this. And he said, I have a plan, I have a network, and I have money. Let's
Perfect
go.
Co-founders,
Yes.
Very complementary skill sets.
Exactly. Yeah.
How did your investment portfolio, your own personal one, look like before you actually started the Singularity Group?
Very heavily in the stuff that I kind of knew or thought I knew, let's put it that way. So very energy focused and definitely only equities. I didn't do anything illiquid or anything else like that. So I was staying in my ballpark, in my place of expertise.
Got it. So you started the company together, and let's say me as a private individual, now I'd like to get involved and invest my money in the Singularity Group. How can I, if that's even possible, how can I do that?
Well, in the company, you'd have to, we have probably in Q1 next year, a growth capital round.
Great.
So that's something to think about maybe.
Yeah.
Where we're on a growth track currently and we want to spend a little bit more money than we have so far and have lots of plans of where to do that. And then the second way to get exposure is through our products, of course.
And there you have many different products. I'm just trying to quote a few. You have the Singularity Fund, you have the Singularity US Innovation Leaders, the Singularity Small&Mid, and the LUKB, the Lucerne Cantonalbank Smart Farming. How do all these offers play together? It seems like a rather different focus for every single product that you offer.
True. So, I mean, the first product was kind of the solution to the problem we wanted to solve back then, which was, if you only had to have one fund that invested in all the doable, applicable technological solutions at any point in time, it had to be global, all sector. And so that's the Singularity Fund. That's our flagship strategy. We built an index first for that fund that has a longer track record and then built a UCITS Luxembourg retail insti private investor kind of vehicle, right, that covers everything, is highly regulated. Because we felt like if we wanted to do this one thing fits all, and it's a new process with a new young company, we wanted to have it super regulated. Yeah. So that's great now. Back then, that wasn't the easiest thing as a young, small company. But now it's wonderful because anybody can actually invest in this product, and it's very solid from every perspective. It's very diversified as well. Then we launched a small-mid strategy to cover another area that the fund itself doesn't cover as well or as focused. So we launched a small mid-cap product on the Russell 2000. That was a shareholder demand, actually. We had a couple of ideas and we ran it by shareholders that were able to seed an AMC structure then. And that was the thing that they focused on. So that's why we launched it. But the thought process was along the lines of our methodology. How can we build another thing that outperforms its benchmark, right? So another selection of only those companies that actually apply innovation, that make money with innovation. What benchmark would you select that from? And then funnily, the US Innovation Leaders portfolio is built on the NASDAQ 100. That idea has been around roughly 1 year from start. And we've showed it to people and we had a paper track record. And every single time we wanted to launch it, everybody, including myself, would sometimes say, it's at all-time highs. Maybe not now, which is one learning that I learned the hard way. You should never think that way because that has been a phenomenal portfolio and it's gone from all-time highs to all-time highs and it's just reached new all-time highs now.
I imagine, especially with innovation, right? Because there's always something more to gain. Of course, there are ups and downs eventually, but very often you will have all-time highs because there's just more value being created every day, basically.
Yes, especially in innovation, I would say. And I mean, we shouldn't have, back then, early days, if I think back, we had a theory and a conviction, but we didn't have proof. No. And so I think that's why we were led more by where the seed money was than by our conviction, even though we had that conviction still. And now, I mean, I'd launch anything where I understand that our process works, right? But it has to be able to work. So, I mean, those three products are initiated by us. Those three, Singularity Fund, SMID, and US Innovation Leaders. They're built on benchmarks, and they select out of those benchmarks only the innovative companies. Yep. So you have we have 300 companies in the Singularity Fund, we have 100 companies in the SMID, and we have only 33 companies out of the NASDAQ 100 that fulfill the criteria. Right? So it's a bit of a different portfolio. And the other products that we have are collaborations. So we've had actually very often that private banks or wealth managers ask us if we could help them with a theme that their clients are excited about.
Of course.
Sadly, I don't make money saying no. So most of the themes that I've been asked or we've been asked to do have actually been hype themes that don't really make a lot of money, that don't really have a value chain, and we've seen them collapse, right? So what happens is we say, hey, don't do this theme, let's do a broader one. They say, no, we want this theme. They do it with somebody else, and you can watch it go up and down and replicate what Tobias already wanted to avoid. So that's not really satisfying, right? Because you don't want those people. You'd rather just have them follow your advice, actually. Yeah. And LUKB Smart Farming they've come to us with a few other themes before. And this was one that we could actually kind of put our stamp of approval on and say that we could cover it, that there was enough of a value chain and companies with solid revenues and earnings in there.
Got it. And I wonder, what is actually your business model? Do you just take a percentage of like management fees in terms of total assets under management, there's a cut, that's your whole revenue, or do you also have other income streams?
That's our current whole revenue. I have to say for those kind of special tailor-made products for wealth managers on single themes, we do have a flat minimum fee. And then we have asset under management based kind of percentage fee as well.
Got it. How high is that percentage fee roughly?
It depends by product, but it is anywhere between, it's roughly 1% actually, depending on the investor class you're in.
That's even a bit like on the lower side of the industry average, I think, right?
Yes. By now we're challenged with fees. I'd rather be on the higher side of things. We have some private investor share classes that are a little higher than that people are also sometimes complaining about. I have to say to that, after fees, all I care about, and I think really clients should care about, is if your performance after fees still outperforms your benchmark or your peer group.
Exactly.
I think that's the better measure to go by.
That's basically what you're getting paid for, right?
Exactly. Also, the work that we do is intensive. You have to hire very smart people that get paid a lot in the industry.
Yeah.
They have to work very hard. And so it's the data you acquire, the data you need to buy, the systems you need to use. It's all not that cheap, but it's worth it. I think we're also a bit of a luxury brand, but I think we do high quality luxury work.
That's a very good sort of branding in that sense.
Yeah.
Me, myself, I love personal finance. And if you just read any financial blogger, they always say no actively managed fund will outperform the purely boring, broadly diversified total world stock ETF. So that's, of course, a big challenge, right? To your work, basically. They say that in the long term, like 10, 20, 30 plus years. But what is your take on that? You're basically getting paid to outperform these benchmarks, but at the same time, it is very difficult to do so. Like very few fund managers actually do that.
Yes, but you basically you answered the question, right? You didn't say nobody does. You said very few do.
Exactly.
So I think the problem is just that many don't. And often those many that don't, or currently those many that don't, we see them. They're large companies with great brands that are big. Yeah. And the problem in the industry, I had a few events lately with foundations and pension funds, is they prefer to buy a brand with a huge asset base that is known than to invest with a smaller entity. And so, there are actually large companies that over the long term have also outperformed. I'm not going to do their marketing today, but it's not true that nobody can outperform. Some companies do. I do agree that sometimes you need to switch, especially in the active world. The time you might want to consider switching is when the manager changes because you buy another set of emotions and behaviors, right? Yeah. So I think that's one thing that was very dear to me when I founded the company, because I wanted it to live forever, really, even beyond me and everybody that's part of it now, is we built a systematic process to it as much as we can. There are some discretionary decisions, but we try to make those as systematic as possible. And I think with that kind of approach, you have a better chance of over the 30, 40, 50 years when management change to also do that. And there are some companies that have also thought about that, not many, but those are to be found, and that those are not the largest ones. Mm-hmm. So the problem the industry has is they keep saying, we've tried with all of these funds and they all underperform. Mm-hmm. Well, you've just covered your ass with the brand, and that's why you underperform. So now you're covering your ass with the index. So I don't know what's better of those two.
Let's talk about your numbers, if you're open to that. What is the best performing vehicle that you have? What's the annualized return there?
We have a paper track record, which is a real track record since we've had systematically evaluated those scores of those companies since we existed. So the annualized return for that portfolio has been 21.1% after fees, by the way. For the NASDAQ itself, it's 18.9%, so that's 2.3% outperformed annualized. That's quite a lot of compounding there.
That's amazing.
For the Singularity Fund, it's around 12.7%, where the index is at 9.7%. So there you also have an annualized outperformance after fees. And there even, it will probably get better, I think, because we had a bit of a problem in the beginning because of that UCITS structure. We had much higher fees than we should have had, actually. I can dive into why you shouldn't launch with 3 million a UCITS fund. That's maybe for another podcast.
Absolutely.
Yeah.
So you have a very strong track record in that sense. Now, if you project that 20 years from now, do you still think that this is possible to outperform every year by 2 or 3% compared to the index that you're tracking?
Yes, especially that relative performance, I think, is doable. And the reason I think that's more likely in the future, as long as we have interest rates, actually, is that I think as long as now that we're out of this negative interest rate scenario where stuff went up, even though it didn't make earnings, we have proven over 6 and 7 years now, actually, that we are able to identify those companies that are able to make better earnings day after day. And we will exit companies that don't manage to do that anymore. So I'm not saying that today we say in 10 years this will be the best company. We reconsider our decisions regularly, every half year actually. And sometimes we just keep staying in for longer. But the reason I think we can do even better is I think as long as interest rates exist, inflation is a little bit around, more and more the earnings of the companies will matter. Their profitability will matter. And we're really good at that. So I think the time in which you evaluate and decide to go passive or active also matters. So I've spoken to a few banks that have exited asset management because they've decided active management doesn't work. And they decided that somewhere within the last 10 years. So they decided that in a time where the market had to be irrational because interest rates were negative and they just had to apply into equities. I'm just talking about equities now. Yeah. And I think they're getting some things a little wrong because there are enough active strategies that did well before this time. And the reason things were distorted was not that those PMs and those people or those strategies were wrong, but because the market wasn't pricing efficiently. So that's why.
That's a very good perspective and also important reminder to really consider a longer period of time to make such decisions.
Yeah.
Buying Bitcoin has never been this easy. Thanks to the Relay app, you can buy Bitcoin with a bank transfer or a debit and credit card within a minute. The great thing about Relay is that you are the sole owner of the Bitcoin you buy, as you're always in control of your funds. You can also set up a savings plan to buy Bitcoin automatically every week or month, or buy it fee-free for up to 100 Swiss francs or euros each month. Take control of your future today by downloading the Relay app in your app store of choice and use the code SWISSPRENEUR to enjoy 10% less fees. That's SWISSPRENEUR in all caps. A quick disclaimer, Relay services are exclusively recommended for Swiss and Italian residents.
You mentioned that there is sort of a disadvantage of being a smaller firm with the higher fees that you faced. So what are the disadvantages and advantages of being a smaller firm? Because on one hand, it's a great USP for you to say, hey, we are not one of these big brands, but we actually can dive into our process and deliver better return. On the other hand, lower volumes also come with pretty big disadvantages, I imagine.
Yes, I think it has. We found our way through, right, with a Swiss term called Türklinkenputzen, or German one. So I think once we get in front of curious and sophisticated investors, we've gotten now beyond those few thresholds, right? Time passes anyway, so people wait for a 5-year track record. Used to be 3, now it's more 5, or some people even told me 10 now on the pension fund side.
Crazy.
And the other thing is AUM, right? Assets under management. I think though the reasons there don't apply to us. We have extreme liquidity. We're a large cap listed equity, highly liquid, product. I could sell the portfolio within a trading day, even if it's 10 million big. So some people don't want to believe that because they've made bad decisions in the past where they didn't evaluate that. But generally the industry, and I can't blame them, fund selectors at bigger companies, even bigger wealth managers or smaller ones, don't really have incentives to take a bet on a new brand. So it's easier to be in a brand product that others also have. So if they went down, you also made the same mistake. Yeah. It's a little bit of a shame. Lots of them also confirm that is the place they sit in. You don't really get applauded if you do well. So it's kind of expected if you pick a better manager. Yeah. And once that manager might not do well for a year or 2 or 3, then you really get hurt, right? And so I think there are not enough incentives for that. I have to believe that might change with time, because we've now seen that a lot of big companies can also fail or not deliver great returns. So I'm hopeful. I don't think any bank or, larger wealth manager will do that. So that speaks also for our smaller clients that are willing to do that. Swissness has helped us. And being a small team that's accessible or that's close, at least to our clients, has helped us, I think, for those that value that. Then that's a big problem, right? So if you're small and you need to build up a 10-year track record and you need to build up AUM, you need to find those people who are willing to give you kind of the benefit of the doubt and make an exception. Yeah. And I think we're able to find those the more we get in front of people and the more attention we get. That's why I'm very grateful to be able to be here. And the good things are, of course, that you have very short pathways between each other. You can make quick decisions. You're very close to each other in the team. That can be good and bad, but for us, I think it's mostly good. You can make decisions faster, and you can be more nimble in terms of launching new products as well. But the biggest problem for us is event costs, not having a brand to be able to speak. Even though we have something more interesting to talk about than maybe the CEO of a big bank, it matters more the brand you have than anything else to the industry still. So.
I see that. How did you find and acquire these early adopters, so to speak, who said, hey, I give you the benefit of the doubt. I trust you with my money because I really believe in you and your strategy. How and where did you find these first initial investors? Because that's, as for any startup, basically one of the most critical things to do.
So, I mean, an initial step was made with our board members. So Tobias Reichmuth, Eric Sarrazin, they themselves took the time to sit with us, understand what we're doing, and were the first investors in the fund actually as well, of course.
That helps for sure.
So that helps. Them putting their stamp approval on us and inviting their network also helped, at least to get attention. But I have to say, in the listed equity space, things get decided by fund selectors, not by the top people in a company. So it wasn't so easy to get a top-down decision. Yeah. So you still had to go through that whole funnel, but some of those are now, after 5 years, actually also coming to fruition, so it matters. And the other thing is, I think, just by imposing, these fund selectors get knocked on the door by, I don't know, hundreds probably of funds a week.
Yeah, it's sort of public information. They sit on money, right?
Yes, exactly. So I made a point to sometimes promise that I would show them something different and unique and that I wasn't just blabbing about it. And I told them, let me come. And if you don't agree that it's new and good, we never have to see each other again. And so some people actually still never wanted to see me again, but not that many. So I think we had a really good hit rate in terms of if we got into someone's office, we managed to keep the attention. And then with time, they would watch us kind of hear the story again, because it's not so complex, but it's difficult to remember. And once they kind of got the gist of it and saw the results, those flows came in.
Amazing. Nevertheless, it's a long process, it sounds, and also a very hard and difficult one. What made you stick through it and not just say, look, I got so many no's, let's just quit it, let's just end this, this is not going to work?
I think it's conviction that it had to work a little bit in the beginning. And I mean, I think if nobody gave us, even a chance to sit with them, we probably would have had to give up, because there's an issue with funding. But I think you get knocked down and knocked down and knocked down and knocked down on those little successes. And I would say even now we get knocked down and knocked down by people we would like to, be not knocked down by. But the biggest feeling of we should continue is when you meet with very challenging investors that are smart, that have been through phases, that are sophisticated, that get what you're doing, take you apart, and then invest. Wow. And then you realize, wow, even this guy or this woman, she did all the work and she's now on it. That gives you these successes, because I have to say, the easy money, doing an article in NZZ and getting 8 million flows, we've done that as well. That's cool, but that's just a marketing event that gave you some inflows, right? So I think the more satisfying one is really showing somebody that gets it, them realizing the little flaws you might have, but also realizing what's great about it. Yeah. And that keeps you going, because you kind of found that other believer.
Exactly.
And it's not the AUM you gather that makes you confident and feel good. It's the believers, or the convinced people that, they know what they're doing and they're choosing you. That's a good feeling.
Yeah, I also feel that in the financial industry, you have a lot of very smart people, like a very high density of smart people. And then getting them to invest in you, in your strategy, that's like a very, very good feeling because you feel, hey, they're also very smart and they get it and they agree. That's why they put their money into your product.
Yes. I wouldn't agree that I don't know. I've been in one other industry slightly exposed, so I wouldn't necessarily say that finance has the smarter people. But
fair enough. Yeah.
I think sometimes I also don't think you have to be. I think to understand investing, you don't just have to be smart, right? You need to understand the pitfalls of investing and the opportunities. Yep. And as long as people understand that, and you can present to them your strategy. We also go, we correct when markets correct. Having an investor buy your fund knowing that because they understand how you work and knowing that they will go through that with you because they understand how it works on the upturn as well. That's very satisfying and it keeps you going. And of course, it keeps the money coming in and it keeps the company alive.
Definitely. Trust is also a very important part of your business, right? And you can build it in probably multiple ways. One is performance. That helps you if you have multiple years of performance to show for, and it's like, here, black and white, this is our performance. We outperformed. You should trust us and invest your money. Another aspect is probably your personal relationship, that you really sit down with the people, explain everything. They like you, they like what they see, your strategy, and then they trust you. How else do you build trust with the potential investors?
I think it's definitely a human element, also the team, the kind of caliber of people and how they interact with the clients. I mean, often a client doesn't just meet me. You know, they come by the office, they meet the people. They definitely don't meet the whole team for coffee and psychoanalysis. Course, yeah. But I think they like to see that you were able to acquire and keep some smart people. And I mean, the way we do it now is we have a very transparent system of the way we go about things. And we're able to show people on company cases, sector cases, etc., what our process spits out. And the fact that we're able to show that some of those things aren't as clean as you'd want to see them, but they're good enough. You just have a proxy again. I think clients really appreciate knowing how your process goes and being shown that transparency, being shown where you can't deliver, in what market phases you can't deliver, and not trying to claim something else. Yeah. So, I mean, I know in the beginning I also oversold because I kind of had to, I think, or I felt like I had to. With time now, I know the strengths and weaknesses, and telling those to people up front, I think they appreciate it. And then when you behave accordingly, they know you kind of told them the truth. The good thing about finance eventually, especially our process, we want to be dependent on companies' earnings reports. So you will find out if we were right or wrong, and we will know or have an idea of what we got wrong if it does go wrong, and we'll transparently explain that. So I think that helps as well.
So it's also a lot about communication and walking the talk in that sense.
Yes. I think that's it matters a lot. I would say that, when I've asked other people to ask our clients and our investors why they're invested, because I was curious. And a lot of it comes from just the people's energy. So far, up until a year ago, I was the main salesperson, and we added Johanna in Liechtenstein. And I think where she showed up with her clients as well, they could tell she was convinced. Yeah. Now we've added another salesperson, Sabrina, a year ago, and people can tell that we're excited, convinced of our own process. And I think for me, the feedback is that I live it, right? So I think people feel that energy. And that, I don't think you can label it.
Yeah, you can also not fake that, no chance. Yeah, I love that. If you look at your team that you just mentioned, you have 2 men and 6 women that are part of your team. That's something that's unfortunately still not that common, especially not in finance. Was that a very deliberate policy that you established there, or more of an accident, so to speak, that it just happened by coincidence that you have way more women on the team than men?
It wasn't a policy. It's also not, I don't consider it an accident. I think that's the wrong word. No, it wasn't a policy. So I actually thought about it. I think I'd hired more men than women. It's just that the resulting team is now more women than men. I would say for finance, that is still very difficult. So if we blame any financial entity for not having enough women, we shouldn't, because I do know we had a few recruiting processes for research and the investment team. And we had, I think, somewhere in the tune of 150 applicants, and I think 5 were women. So it's really very difficult to select for women from that, even if you wanted to. We didn't have that goal in that situation. I haven't had it for a single role. I think everybody in my team was somebody I somewhere along my life and work came across, and almost everybody is somebody that I went back to because I met them and I realized I need this kind of profile, and gee, that person seems to fit it, and then I would end up going back to them, or they were introduced by the network. So it wasn't an active search for either gender.
Got it. I have one last question on the team part. Just out of curiosity, we know the game a bit from venture funds, right? They invest in startups, and there the team is often incentivized with a fixed salary and then also parts of the carry. How does that work in the real financial world? How do you incentivize your team? Of course, you also have a fixed salary, I assume, but how do you incentivize the team to also tie their performance to the overall product's performance?
So we have salaries, we have an employee share ownership plan.
Nice.
Apart from that, I've asked actually everybody to invest in our products if they felt good about them. And I can proudly say that most of the team is invested in most of our products, actually.
That's a very important sign.
Believe in them. Yes. Our whole board is invested in all of our products. So that is not the company giving them fund shares. That's them actually investing, right? So
own money at stake.
At the same time, I think if you would have to interview the team about what makes them want to be part of this company and stay. I think it is what they're working on, why they're working on it, and who they're working with that excites them. I don't think you can find any role that we have the same way in the finance industry at all. No. So maybe in other industries you can do similar research or marketing, but I am convinced that these roles don't exist and that they're not that exciting. One thing we haven't touched on, we work with a large base of entrepreneurs that are our experts. We get to exchange with them. We learn an immense amount of information, fun quirks. There's so many intriguing things about working at the Singularity Group that I think everybody has their own little fascination. They're not all the same reasons, but I think that's also valuable, right? So you're not somehow in the trot of what I think is the finance industry is one of the most stale industries, actually. So I think we offer that as well. A really nice workplace, an office. We have flexibility, but you know how it is when you build a young company. I mean, you're as flexible as you kind of can allow yourself to be, because you still have to get stuff done, and you usually work overtimes and weekends. So I don't think it's the flexibility that's attractive.
Yeah,
everybody's attached to the product success, and through the employee share ownership plan, everybody's aligned with the company's success.
That's amazing. And I also hear that there's this personal learning curve or growth path that is probably also playing a very important role in their career decisions.
Yes, I would. I mean, right, some of us are in our 40s, early 40s, and the rest is kind of along the lines of the kind of 25 to 34. But I think nevertheless, if you have to build up something from scratch and you have to deal with stuff that you never had to do before because it was already done for you somewhere, you learn your personal limits and boundaries, I think, very quickly. Also working that closely within a team and having to be dependent on so many people that are actually very close help you get to know yourself as well if you allow that. So I think there's a huge opportunity there as well.
Sounds very fascinating to me. Now, you've been around for 7 years. We heard about the strong track record, and I just wonder, what is next for you? What are the next milestones or goals that you look forward to achieving with your team?
We're this year in growth mode. We grew our assets more than 50% this year. This was our breakthrough. We finally got through those magic 100 million in the flagship fund. We have a long track record. We're typically in the first or second quartile, mostly first in our Morningstar peer group for the flagship fund as well. So I think a lot of things are going very well for now. And we're kind of just plowing into the assets of that performance, right? We want to get all the people that know us now over these 5 years then haven't invested, they're the next ones that we want to get to. So it's growth. It's really just growth in the products that we have now.
That's really exciting, and congratulations to these very strong numbers and milestones. That's amazing.
Thank you.
Super cool. So to wrap up the episode today, we also prepared some rapid fire questions for you. I give you a short question you have to answer in 1 sentence maximum.
Yes.
You ready?
Mm-hmm.
Do you regret making an investment or regret not making it?
Making.
Yeah? Mm-hmm. Nice. What is the most prevalent industry in your personal investment portfolio?
Capital equipment. It's actually semiconductor equipment, but that's classified as information technology, but it's an industrial type of business.
Nice. What is, in your opinion, the most innovative Swiss company or startup in this very moment?
Good that you asked in this very moment, November 4th, 2024, because I think it can change. So we analyze listed equities. So from a professional standpoint, I would have to say, a Swiss company, you have Lonza, ABB, Straumann, and kind of Givaudan that are great innovators. I think ABB is currently the one that's really plowing on that applied innovation with an M&A strategy that they're executing very well. So that would be in the listed side. Mm-hmm. I actually thought about this question a little bit. I know a lot of startups, and because I believe in applied innovation, I cheesily think it's us.
Yeah, I love that.
For all of the reasons I said before, we're really disrupting an incredibly old industry that almost nobody else dares to or can disrupt because size is such a big measure for success. So it's super difficult.
Yeah.
And so I think we're now, after 7 years, really doing an unbelievable job in this industry. And really, we're innovating it.
That's a great statement.
Thank you.
And what technology or innovation, so not company, but really the technology behind it, are you most excited about right now?
I would be excited about an innovation that would revolutionize elderly care. I think there are a few things that could be done on that side to better manage our old phase.
Absolutely. That's a space to watch in that sense.
Yes.
What's the biggest investment red flag for you?
Not being able to question a decision, even if it was just yesterday.
Nice. And the last question for you, are you more of an early bird or a night owl?
Early bird.
Easy. When do you get up in the morning?
6.
Yeah.
I think the least, I can also be a night owl if I have to. I'm the least useful, or barely useful actually, between 3 and 6 in the middle of the day.
That's fine. That's probably when you should go for a run or something.
Yes, exactly. Or a nap. Yeah.
I love that. Evelyne, thank you so much for coming on the show and taking us for a look behind the scenes at the Singularity Group. I really enjoyed the conversation. I wish you the best of luck, which you probably don't need, but the best of returns.
Oh, no, I can always use some luck.
Okay, and the best of returns for the future.
Thank you.
We hope you enjoyed today's episode. If you did, you can support us by rating our show on Apple Podcasts. This way, we can reach an ever-growing number of aspiring entrepreneurs.